I could have been twice as rich if I hadn't made one dumb mistake 50 years ago. That's not a complaint. It's a reminder. Getting rich isn't about brilliance. It's about avoiding stupidity. And stupidity usually comes dressed as urgency. People want to get rich fast. That's the oldest trap in the world. If you look around, most financial ruin has the same root cause: impatience. Gambling at the casino, playing the lottery, chasing hot stocks, leveraging to the eyeballs. It's all the same disease, wanting results before you've earned them. I've lived long enough to see the pattern repeat. In the 1,920 seconds, people thought the stock market was a money machine. In the 1,990 seconds, people thought internet stocks could only go up. In 2008, people thought houses never fall in price. Different decades. Some stupidity. Getting rich slowly sounds boring. But boring works if you keep your costs low, reinvest your earnings, and avoid catastrophe. Wealth will creep up on you. Not because you're smart, but because you didn't blow yourself up. I grew up in the Great Depression. I saw families lose everything. Not because they weren't hardworking, but because they took on too much risk when times were good. When the tide went out, they were naked. That memory burned into me early. Never depend on things staying wonderful. Assume they won't. Assume the worst will come and be ready. That mindset alone will make you richer than 90% of people. I was never in a hurry. Buffett and I built Berkshire Hathaway brick by brick, deal by deal. No fireworks, no genius moves, just patience. The kind of patience most people can't stomach. If you want excitement, go to Las Vegas. If you want wealth, embrace boredom. The truth is, nobody wants to hear this. They want tips, hacks, shortcuts. But shortcuts in money usually lead to long detours and misery. I've seen rich men go broke because they couldn't sit still. And I've seen ordinary men grow wealthy just by saving steadily and owning productive businesses for decades. The gap wasn't intelligence, it was temperament. So here's the paradox. The fastest way to get rich is to stop trying to get rich fast. I didn't plan to become a billionaire. I simply stayed rational longer than most. I avoided envy, I avoided debt, I avoided drama, and I let compounding do the work. If that sounds dull, good. Dull is safe. Dull survives. Dull gets rich. The crowd never learns this lesson, but maybe you can, because getting rich slowly is the only way to stay rich forever. Of all the ways to ruin your life, envy is the most useless. I've called it the dumbest sin, and I stand by that. Think about it. Lust can give you a little fun. Gluttony can give you a good meal. Even anger can get you moving. But envy, it's the only sin that doesn't give you anything except misery. I grew up watching people cripple themselves with envy. They'd look at the neighbor's new car or some cousin who got lucky in business, and they'd stew. Instead of working on their own situation, they obsessed over someone else's. That's not only irrational, it's corrosive. Buffett once said, "It's not greed that drives the world, it's envy." He's right. And envy is the engine of stupidity in markets. Why do people buy stocks they don't understand? Because their neighbor made money on it. Why do they pile into bubbles? Because they can't stand seeing someone else get rich while they're left behind. I've lived through enough bubbles to see the same pattern. In the late 90 seconds, internet stocks turned ordinary people into millionaires on paper. Every cab driver had a stock tip. People felt like idiots if they weren't in the game. That's envy in disguise. And when the bubble burst, most of those envious speculators lost everything. The cure for envy is simple. Stop playing other people's games. Play your own. If you're always measuring yourself against the next guy, you'll never feel rich no matter how much money you have. I never cared if Buffett made more money than I did. Of course he did. He's Warren. But what difference does that make? I had enough. I lived well. I slept at night. That's real wealth. Some people say envy is natural. Maybe so. But so is dying young if you don't brush your teeth. The smart thing is to fight the natural stupidity in your brain. When you strip it down, envy is just ignorance about the basics of compounding. Because if you spend 30 years steadily compounding your wealth, it doesn't matter what the guy next door is doing. Your results will be fine. Better than fine. So here's my advice. The next time envy whispers in your ear, shut it up. Remind yourself that you're playing a long game. Remind yourself that envy has never made anyone rich. I've seen envy ruin reputations, destroy partnerships, and push smart people into dumb risks. I've never seen it produce happiness, not once. So don't fall for it. Be rational, be patient, be boring, and let the envious people drive themselves crazy. That's the smartest advantage you can have over them. I've made plenty of mistakes. Don't let the billionaire title fool you. I could have been richer. A lot richer. One of my dumbest mistakes was clinging to cigar butt, investing for too long. That's when you buy some awful business, just because it's cheap. Like picking up a soggy cigar from the sidewalk and hoping you can squeeze one last puff out of it. Ben Graham taught this method, and it worked in his day. Buy enough discarded businesses at low enough prices, and you might come out ahead. But it's a miserable way to live. You're always stuck with lousy companies, lousy management, and lousy prospects. Buffett and I wasted years on cigar butts, textile mills, department stores, you name it. Every time the logic looked clever on paper. Every time reality beat us bloody. Take Berkshire Hathaway itself. Buffett bought it as a cigar butt cheap, dying textile company. We should have walked away. Instead, it turned into an albatross. It took decades to repurpose Berkshire into the compounding machine it became. That mistake alone cost us billions in opportunity. Here's the thing, the world doesn't reward cleverness. It rewards discipline. The discipline to admit when a strategy no longer works. The discipline to stop digging when you're in a hole. I eventually learned this lesson. It's far better to buy a great business at a fair price than a fair business at a great price. That shift changed everything. We went from scrounging in dumpsters to owning Coca-Cola, See's Candies, and businesses that printed money year after year. But we paid tuition. The price of that lesson was hundreds of millions of dollars in lost opportunity, maybe billions. Most people don't realize it, but mistakes compound too. Hold on to a dumb idea long enough, and it multiplies your losses. That's what happened to me. If you want to get rich and stay rich, don't just study success. Study failure, especially your own. It's the only way to avoid making the same dumb move twice. You won't get everything right. Nobody does. But you don't need brilliance to win. You just need to avoid repeating the mistakes that drain your capital and your time. I don't regret the errors. They made me sharper. But I'd be lying if I said they weren't costly. So if you take one thing from this, don't romanticize your bad habits. Cut them out. The world doesn't hand out extra credit for stubbornness. It only punishes it. The biggest problem I see in the world is overconfidence. Everyone thinks they know more than they actually do. That's dangerous in life, but fatal in investing. People form opinions on stocks, politics, health, things they barely understand. And once they form an opinion, they defend it like a religion. The less they know, the louder they argue. I've spent my life trying to do the opposite. I want to know the limits of my knowledge. That boundary line is where safety begins. When I don't know, I say, I don't know. That phrase has probably saved me more money than any stock pick. Take the real estate frenzy before 2008. Everybody thought housing could only go up. People with zero understanding of credit risk were buying second and third homes on borrowed money. Why? Because they were confident without reason. And when reality returned, they were ruined. The cure is humility. Not the fake kind, where you act modest while secretly thinking you're a genius. Real humility, the kind that accepts your ignorance and keeps you from wandering into fields you don't understand. I've never invested in complicated technology, not because I hate technology, But because I don't understand it as deeply as I understand consumer products or insurance, I don't need to pretend I know everything. I only need to know enough in my circle of competence. Most people can't stand that discipline. They want to believe they're smarter than they are. That's why they get pulled into speculation, fads, and nonsense. Here's the irony. The people who survive in the long run aren't the ones who know the most. They're the ones who admit what they don't know. I've said it before. It's not supposed to be easy. Anyone who thinks it's easy is stupid. And yet, overconfidence convinces people they've cracked the code. Markets punish that arrogance. So does life. I've seen investors, lawyers, politicians, all destroyed by their inability to say, I was wrong. They'd rather double down on stupidity than admit uncertainty. That's pride, and pride is expensive. The smarter approach is simple. Stay inside your circle of competence. Don't bluff. Don't kid yourself. And don't let ego make your decisions. You can go very far in life just by avoiding dumb mistakes born of overconfidence. That means biting your tongue, keeping your bets simple, and being content to let others chase brilliance. Because most of what looks like brilliance is just risk waiting to blow up. If you can remember that, you'll last longer than most. Most people spend their lives as careerists. They climb ladders, they polish resumes, they chase titles. That works fine if you want a comfortable salary. But if you want real wealth, you need ownership. There's a world of difference between working in a business and owning one. Employees get paid for their time, owners get paid for results, sometimes forever. When I was a young lawyer, I billed hours. That's the most soul-crushing way to earn a living. You only eat if you keep grinding. The treadmill never stops. One day I realized I didn't want to spend my whole life selling my time. Time is the one thing you can't compound. Money compounds. Knowledge compounds. Time just disappears. So I made the switch. I quit practicing law and focused on ownership and partnerships, equity, businesses that could grow without me working myself to death. That decision changed everything. Buffett saw it the same way. That's why we've always preferred owning businesses outright, or at least owning big chunks of them. When you own, you don't wake up every morning wondering if the boss likes you. You wake up knowing that if the business performs, you win. Careerists often fool themselves. They think titles and promotions equal security. But the moment they stop working or the company stops liking them, the game is over. That's not wealth. That's dependency. Ownership is different. A good business keeps making money whether you're in the office or not. See's Candy sells chocolates every Christmas. Coca-Cola sells sugar water every day. We don't have to do a thing. That's the beauty of ownership. No, I'm not saying everyone should quit their job tomorrow. But if you have a choice, tilt toward ownership. Take equity instead of a slightly higher paycheck. Save and invest until you own a piece of something that works while you sleep. That's how wealth endures. The tragedy is that schools don't teach this. They train people to be employees, good little cogs, and most people never question it. But you don't have to live that way. If you think like an owner, even when you're not one, you'll make different decisions. You'll cut costs like they're coming out of your pocket. You'll care about long-term durability instead of short-term optics. That mindset alone can transform your life. The world doesn't need more careerists polishing PowerPoint slides. It needs more people willing to take responsibility, risk, and ownership. That's where the leverage island, that's where the compounding island, that's where the freedom island. So ask yourself, are you climbing someone else's ladder, or are you building your own house? Answer honestly, and then act accordingly. I was born in 1924. That means I grew up in the wreckage of the Great Depression. People today have no idea how brutal it was. Families lost everything. Businesses disappeared overnight. Banks failed, and when they failed, your savings went with them. There was no safety net. I saw proud, capable men reduced to begging for work. I saw women stretching one chicken to feed a family of 6. And I learned early that prosperity is fragile. One bad cycle can wipe it out. That experience shaped me. It made me cautious. It made me allergic to debt. It made me suspicious of good times lasting forever. Most people forget history. They think crashes and panics are rare. They're not. They're part of the system. When you've lived through the Great Depression, you stop assuming the world owes you comfort. You plan for pain. You build reserves. You avoid dependence on rosy forecasts. Buffett and I always ran Berkshire with that mindset. Low debt, tons of cash. Businesses resilient enough to take a beating. It looks conservative until the storm comes. Then it looks genius. In 2008, when everyone else was drowning, Berkshire was the one with dry powder. Why? Because we never forgot the lessons of the 1,930 seconds. We knew the tide would go out eventually, and we wanted to be the ones left standing. The Depression also taught me something else. Status games are stupid. When everyone's broke, nobody cares about your fancy car or your title. What matters is whether you can feed your family and survive another day. That perspective never left me. Modern society encourages consumption. Buy the bigger house, drive the flashier car, borrow to keep up with your neighbors. That's fine until the cycle turns. Then all that leverage becomes a noose. I prefer boring wealth, cash in the bank, productive assets, no panic when recessions hit. It's not exciting, but it keeps you alive. The Depression made me rational in a way textbooks never could. It burned into me the truth that survival is the first step to success. If you can't endure hardship, you won't be around for prosperity. So here's my advice. Don't assume good times are permanent. Don't rely on credit to prop up your lifestyle. Don't live so close to the edge that one downturn wipes you out. History may not repeat exactly, but it rhymes. And the rhyme of the Great Depression is clear. Only the cautious survived. If you want a simple formula for a good life, here it is. Avoid debt, avoid drama, avoid dumb people. Sounds too simple. That's why it works. Let's start with debt. Debt is poison for most people. It promises leverage, but what it really delivers is chains. I've watched plenty of smart men go broke because they couldn't resist leverage. One bad break, one downturn, and suddenly the bank owns them. I made a habit of living beneath my means. That way I never had to beg anyone for survival. Debt makes you a slave. Cash makes you free. Then there's drama. I don't mean theater, I mean unnecessary chaos. Messy divorces, bitter lawsuits, feuds with business partners. I've avoided all that like the plague. Why? Because drama distracts you from compounding. It eats time, energy, and sanity. I stayed married to the same woman for decades. I avoided partners who thrived on conflict. I kept my circle tight. That stability gave me the freedom to focus on building wealth, not cleaning up messes. Now, the last one, dumb people. This may sound harsh, but stupidity is contagious. Hang around fools and you'll catch their bad habits. They'll tempt you into reckless behavior. They'll drag you into problems of their own making. Buffett and I were careful about who we dealt with. We preferred honest, competent, rational people. Life's too short to waste on the unreliable or the crooked. Better to miss out on a deal than partner with someone who'll ruin you. Most people don't realize how much misery comes from ignoring this rule. They marry the wrong person. They go into business with liars. They lend money to friends who never pay it back. All avoidable if you're willing to say no. That's the theme here. Saying no. No to debt. No to drama. No to dumb people. It doesn't make for a glamorous life, but it does make for a rich one and a peaceful one. Wealth isn't just about the numbers in your account. It's about freedom from unnecessary misery. Cut out the 3 Ds, debt, drama, and dumb people, and you'll already be ahead of 90% of the world. It's not brilliance, it's discipline. and discipline is more reliable than genius. People romanticize my partnership with Warren Buffett. They imagine two geniuses sitting in a smoke-filled room plotting brilliance. That's nonsense. What really happened is simpler. We had compatible temperaments. We avoided stupidity. And we were patient. That's it. No magic. What worked between us was trust. I never worried Warren was scheming behind my back. He never worried I'd run off with the money. That alone put us miles ahead of most business relationships. We also shared the same bias for rationality. Neither of us cared about following the crowd. If we thought something was dumb, we said so. If we didn't understand something, we passed. No ego, no pretensi. Another thing that worked, we enjoyed different things. Warren loves the details. He can read annual reports for 12 hours straight and be happy as a clam. I'm more interested in the big picture, the psychology of markets, the models of human misjudgment. That difference made us stronger. Where I was weak, he was strong, and vice versa. Now, what didn't work? We didn't get everything right. We held on to bad businesses too long. We underestimated how fast technology would reshape industries. We ignored opportunities that could have made us even richer. But here's the point, perfection isn't required. We could afford mistakes because our foundation was solid rationality, patience, trust. That safety net let compounding work in our favor for decades. People think partnerships fail because of strategy. Usually, they fail because of character, greed, ego, betrayal. We avoided those. Not because we were saints, but because we were disciplined. We also had a rule, don't fight over scraps. If there was ever a dispute about money, the other guy got the benefit of the doubt. That prevented small resentments from growing into big problems. Try finding that in most partnerships, it's rare. Of course, luck played a role. Warren and I happened to meet at the right time, in the right place, with the right mindset. We can't pretend we engineered all of it. But the lesson is clear. Find partners who share your values, not just your goals. Goals change, value don't. If you have trust, rationality, and patience on your side, you don't need brilliance. And if you lack those things, no amount of brilliance will save you. That's what worked and what didn't between Buffett and me. Most people think getting rich is about finding the secret formula, some trick, some magic stock, some hidden door to fortune. That's wrong. The truth is far simpler and far less glamorous. Getting rich is mostly about avoiding stupidity and letting compounding do the heavy lifting. If you save consistently, invest in productive assets, avoid debt, and don't blow yourself up, you'll end up rich. Not instantly, not dramatically, but inevitably. That doesn't sound exciting, which is why people ignore it. They want drama. They want stories of overnight billionaires. But those stories usually end in bankruptcy court. The reality is that compounding is slow, boring, and unstoppable. It's like watching paint dry, except the paint turns into money after 30 years. Here's the catch. Very few people have the temperament to sit through decades of boredom. They can't resist tinkering. They panic when markets drop. They get greedy when markets rise. They chase whatever is fashionable. And in the process, they sabotage themselves. I've said it before. It's not brilliance that builds fortunes, it's patience. And patience is rarer than intelligence. When people ask me for advice, I tell them the same thing. Spend less than you earn. Invest in businesses you understand. Avoid leverage. Let compounding work. They usually look disappointed. They were hoping for something more exotic. But exotic doesn't work. Sempre do. I didn't plan to become a billionaire. I just stayed rational longer than most people. I didn't quit when markets got ugly. I didn't get greedy when everyone else lost their minds. I just kept stacking bricks. That's the surprising truth. Getting rich isn't about speed. It's about survival. The longer you survive, the more compounding can work its magic. Most of the people who don't get rich fail for the same reason. They couldn't sit still. They had to chase excitement. They had to look smarter than the next guy. And the market punished them for it. So if you want to get rich, don't ask, what's the fastest way? Ask, what's the surest way? And then be boring enough to stick with it. That's the truth nobody wants to hear. But it's the only one that works.